Now we're going to go over a profit and loss statement, also known as an income statement or statement of income. This is a sample statement that I went ahead and prepared for this course. It says Finity Mortgage Inc. It says for the year ended 12/31/2018. In terms of revenues, you're going to put all the revenues that you've had for that year. In this case, this is a service business, and I enter $75,400 for services. The total revenue here is $75,400. Now, where it says just below that X costs, this is where you're going to enter whatever costs you had to incur on those revenues. In this case, it says 0, and your gross profit is going to be $75,400. In terms of operating expenses, these are all the expenses that you incurred to be able to run your business. These could run anywhere from general and administrative expenses, as you see here, $2,200. Insurance, non-recurring expenses, payroll taxes are very common. Rent are very common expenses. Research and development, salaries and wages, sales and marketing. Marketing is very common as well. Utilities also. If you have electricity, if you have to pay for internet, that would also be included there. Total operating expenses, $2,200. Now, when we subtract $75,400 minus $2,200, you get operating net income of $73,200. Why is the profit and loss statement important? Well, basically, the profit and loss statement is a document that you're going to be required to provide to different lenders to get approved with them. And they don't have to be audited by a CPA, but you do have to make sure that you complete the information correctly. Before I continue, I also want to mention that a lot of the lenders, they want to see a positive cash flow. When you provide these statements, a lot of the lenders want to see around $25,000 gross profit or net profit, or on your balance sheet, the same thing, around $25,000. If it's a little bit less, some lenders don't have issues with it, and they'll let you know if it's not enough, and then you can go ahead and change the numbers if necessary. Okay, let's continue a little bit further down. We're going to go to non-operating or other expenses. You're going to go ahead and put any other expenses that you had, and then the pre-tax income is going to be $73,185 when you subtract $15 under the total non-operating or other income or expenses or loss. Taxes, income tax expense. In this case, there was no expense, but usually if you had to pay a tax preparer or a CPA, that's where that would go. Net income, you have $73,185. So in this case, we're above the $25,000 that most of the lenders require. And this is a good example of a very, very simple profit and loss statement that you can use when you provide to different lenders. Now remember, you can download a template online just by searching through Google, or you can use this template by simply typing in the same information that's here. It's actually very, very simple. So don't be afraid to complete this information. It's not audited. It's just general information that needs to be provided to different lenders. And you want to make sure that you save this document for future reference. Okay, now we're going to go over a balance sheet. So the profit and loss statement is one document that needs to be provided to lenders. Now a balance sheet is the other document. Here you're going to go ahead and put the date in which your tax year ended. So we're putting here December 31st, 2018, and I completed this information as an example so that you guys know how to complete it. Current assets, you can put here in terms of cash, you can put any amount that reflects what you have or what you believe you're going to have, especially when you're just opening your business. You're obviously not going to have any sales yet. So while you project you're going to have a certain amount of sales, you want to make sure that that's reflected on these documents. In terms of cash, you'll see here $59,600. In terms of inventory, $4,530. Inventory can be anywhere from chairs, tables, computers, cars, your car if you buy it for your business. Prepaid expenses, notes receivable, and other current assets all say 0, but they can also be part of your current assets. So total current assets right now are to $64,130. Fixed assets. Any other fixed assets that you may have, like long-term investments, you'll see here $2,550. Land, buildings that you purchased, what depreciation they have or they've accumulated. Machinery and equipment, furniture and fixtures that have depreciated as well. and then you're going to have the net fixed assets, 2,550 in this case. In terms of goodwill, goodwill is what you believe your business is worth. So in this case, we're assuming that the goodwill is 150,300. So if you have a list of 1,000 customers or clients, and you believe those 1,000 clients have a potential profit of over 150,000, then this is where you would put that, and that's why it's called goodwill. Total assets you'll have here now when you add the 150 plus these other two, the next the 2,550 and the 64,130, you get 216,980. Now we're going to move down to liabilities and equity. In terms of liabilities, if you have any liabilities, any accounts payable, like credit cards, this would be here. If you have any other loans or business loans that need to be paid as well. If you have a mortgage for the business, if you own an office or if you own a building, this is where the mortgage would go, because this would be considered a liability if you owe money. Owner's equity. So for the owner's equity, the paid in capital, 141,580, and the net income 75,400 gives us a total equity of 216,980. The total equity 216,980 should be the same over here on the top in terms of total assets. They always need to be equal. So 216,980, and that's what we have over here.